Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Well, Jim, we're going to talk a bit about what the Metals Investor Forum was like last Friday and updates on a couple of favorites, Arizona Gold and Vista Gold.
So what was the Metals Investor Forum show like last Friday in Vancouver?
Well, as we talked about last week, it turned out to be only a single-day show on the Friday. It was originally supposed to be 2 days, but after the PDAC, the whole junior resource sector really chilled and became careful about spending money on marketing events such as these conferences. But it was a very good turnout. Lots of people there. The speakers all had full audiences, and the vibe was good. But what it wasn't was along the lines of, yes, we are finally in a resource junior bull market. Yes, everybody's aware that gold is over $3,000, but the disconnect between the price of gold and what's actually happening with gold juniors, gold developers, and to some degree the gold producers who have outperformed gold so far this year, it still hasn't really caught on. Now, all of the presentations that were recorded, Metals Investor Forum has them on their YouTube channel. My presentation, The Gold Disconnect, it's there. I'll have a link for it in the written version of Kaiser Watch, as well as the backstage interview and corporate presentation done by the company in my session, Bull Ventures. It's also available. Now, usually at these conferences, on the Monday, everybody checks, is there any market activity? Did any of the audience watching these shows, presentations, get excited and go buy it? And usually there is none. But one of the companies actually stood out and had a strong day on Monday. And that was Almadex Minerals, which was up 4 cents on 427,000 shares. Now, Almadex Minerals is part of my bottom fish collection, but it was part of Eric Coffin's session. And that presentation and the backstage interview are now available online, and I'm going to provide the links in the Substack version of Kaiser Watch also. Now, Almadex Minerals is in the bottom fish collection for a very peculiar reason. It actually was trading at or slightly below its cash breakup value, and the big missing piece was a market understanding of what is its story all about. Now, the company ended up in semi-hibernation the past few years because in 2022, 2023, the Mexican government expropriated the 2 discoveries that Almaden and the spin-out Azucar had made, Ixtaca and El Cobre, through various anti-mining lobby actions through the courts, claiming that consultations had not been done with indigenous groups in the area. And the AMLO administration, and obviously now AMLO's successor, Claudia Sheinbaum, have been hostile towards the mining sector. So the title ended up being stripped from these 2 companies, and Almadex was the spin-out that happened to have ended up with all the other royalties and properties outside these major discoveries, which these 2 companies, which started out as the classic example of prospect generator farm-out juniors that Rick Rule absolutely loved, had during the past decade violated that rule by using its own nickel to drill its own targets and actually made 100% owned discoveries. Now, a couple of years ago, Morgan Poliquin ended up reviving a theory that he had developed with regard to eastern Mexico in his PhD thesis, which was published in 2009, and began on a stealth basis to accumulate projects in western United States. And he calls this the lithocap story. Basically, he's looking for alteration evidence of a buried porphyry copper gold stock, usually no mineralization at surface, but you see evidence of bleaching of a hydrothermal system. And what was unusual about his approach was that he did tectonic reconstruction, all the various plate collisions, slab subductions, the kinds of magmas that this would spawn and which would create these hydrothermal systems. And he was doing it in a way that pointed him in places where there had not been much exploration. And, you use your satellite, hyperspectral data, and whatever else is available to home in on these areas, but you end up having to put boots on the ground to see, is this indeed an alteration system with some decent scale beneath which could be a major porphyry. So this is a new type of undercover story. It's not the same as where some much younger basalt flow has obscured everything and where you can only use geophysics. It's geochemically blind, but there is peripheral geochemistry that is used. So it's a very clever idea, and he's been paranoid about others finding out. So of the 14 prospects he staked, only about a half dozen of them have had their names and locations published, because he knows that any smart geologist looking at this and noticing they're out of the way locations would start to figure out what he is up to. And so the company's missing piece has been a much higher profile for this story while he's been in stealth prospecting mode for the past couple years. And he was in Eric Coffin's session, and I finally wrote up my explanation of the whole history of this and why this is interesting and why it could become, very topical amongst American investors if they start demonstrating that, yes, there are potentially world-class porphyry systems still to be found in America, not sticking out of the ground like Bingham Canyon, but just beneath the surface, with requiring at least some scout drill holes to figure out the 3D geology and demonstrate that, yes, this is a fertile setting. So I've got the links available to those. It still remains in the Bottom Fish collection. I published my overview on Tuesday. Obviously, some of my subscribers liked it. It traded up 6 cents on 627,000 shares on Wednesday, and it's now sort of holding in the low 30s. And when it hits 50 cents, when it's clear that the market finally understands what the potential of the lithocap story is, then I'll graduate it to the favorites collection and publish the more gory details that I provided for the members of the Kaiser Research online individual membership. Now, the past week was not good for gold. It lost several $100s when Trump lost his staring contest with China and decided to scale back his 145% tariff, and China scaled back its 125% tariff. I mean, the level of these tariffs, this was in essence a shutdown of trade between these two nations, which would be a disaster for both of them. But as I have argued, it'll end up being a bigger disaster for America, because replacing Chinese manufacturing capacity on domestic soil in America will take years. And so those will be years of a lot of pain with no gain guaranteed. And of course, as soon as this 90-day truce was declared, the Magnificent Seven bounced up and everybody clapped and said, yes, Trump doesn't really mean this tariff business. However, we now only have 60 days left for the reciprocal tariffs that he announced on April 2nd, Liberation Day. And this requires individual bilateral agreements to be worked between the United States and each country. But serious agreements of this nature take years to figure out. And so I think by the time summer rolls around, by the time we have September, we're back to where we started with nothing resolved and the credibility of the United States severely damaged. And this is really, I think, going to drive gold higher in the long run. And it was interesting to see Bloomberg's John Authers in a Points of Return article that he published this week. He focused on a graphic put out by the Bank of America Global Fund Manager Survey, which showed that the net percentage of fund managers who believe that gold is overvalued is the highest since this data started being collected in 2008. And I found this quite laughable, because in past uptrends in this overvalued sentiment, there was always a correlation with a rising gold price and accumulation of ounces within the GLD ETF, and also within for the gold producer prices. And in the big 2008 to 2012 cycle, the gold producer prices disconnected from the gold uptrend in early 2011 and started trending down. And that was the fund managers starting to develop that everything's overpriced and starting to ease out of the gold producers. This time around, since gold started its big rampage towards 3,500 in February 2024, the GLD ETF has barely gained ounces. There is no pattern of accumulation that we saw in the earlier run-up. And also the gold producers, it was only really this year that they finally started to outperform gold. So I have a feeling that this negative fund manager sentiment is not the usual kind where they start expressing it after they profited from an uptrend, blown out their producers, or in this case, physical gold, and are now talking up their negativity so that they can be, help talk the market down and be proven right in the long run. I think this is a case more of missed the boat, sour grapes, because they weren't long the GLD ETF, and they only recently started buying the gold producers, and they never have yet to get around to buying advanced gold developers such as Vista Gold. So I think this negative sentiment is a contrarian symbol and not signal and not really an indication that gold's run is over. I think we still will see gold charge into the $5,000 to $10,000 range within the next 12 months.
What caused an Australian judge to call Vista Gold's Mount Todd gold project nothing more than a mercenary exercise?
Vista Gold has not published any news releases about this situation that played out during the last few weeks. On April 22nd, there was a court hearing in Northern Territory where Vista Gold essentially pled guilty to having violated a sacred site. Now, this was reported several weeks ago by the ABC News, which is part of the Australian Broadcasting Corporation, which I think is similar to Canada's CBC and the UK's BBC. And on May the 13th, it reported that the Darwin local court had fined Vista Gold Australian $160,000 for this transgression. And when I first heard about it, I was curious, what was this all about? And it turns out that in 2020, Vista Gold had undertaken a drill program in an area which already had drill pads and roads from a previous operator. And remember, one of the knocks against the Mount Todd project in Northern Territory is that it was put into production a couple times, both times disastrously, because they hadn't really figured out what this deposit really, what made it tick. And this was a leftover drill pad area, and they were looking for additional ounces. And they did the usual stuff, consultations with the Jawoyn Aboriginal group, and whose territory Mount Todd sits. And apparently they had 6 meetings. Everything went fine. Everybody was on board. And what they somehow had not paid attention to, that something called the Aboriginal Areas Protection Authority had declared this so-called Yinberry Hills as a sacred site. Now, this isn't a place where you find artifacts, archaeological remnants of the past. It's just one of these spiritual areas, and how they end up getting declared as such, it's not really clear how this gets done, but this AAPA was created in 1989, and its job is to designate these areas and basically forbid any sort of disturbance of them. And Vista Gold, when they discovered this in 21-22, they had drilled 26 holes. They had not built any new heap drill pads. They had not built any more roads. They had simply cleaned everything off and made it usable. And they were absolutely chagrined. Somebody dropped the ball and had not checked with the AAPA to make sure that this roughly 10 by 10 kilometer area was a forbidden zone. And the Jawoyn Aboriginal group had somehow also forgotten that this particular area was supposed to be sacred to them. So, of course, a case was brought against them. Vista Gold admitted was not happy that this kind of blunder had happened, because it's done everything possible to make sure the Jawoyn are on side. Several years ago, they got the 10% working interest converted into a 3% uncapped NSR. So if Mount Todd ever gets built, the Jawoyn people are going to benefit enormously, and even more so when the gold price goes up. And of course, there wasn't much of a trial because the company pleaded guilty, and the sentencing or the fine was announced on May 13th. And the judge was grumpy about it, and that's where this phrase muttering about this was nothing more than a mercenary exercise. And he also demonstrated his ignorance about exploration, because he made some snide comment about how they couldn't find anything at Mount Todd, and therefore they had to look in the sacred area to find something, when really that wasn't the case. They already knew where the millions of ounces were located. They were just checking out what the previous operators had drilled to see if there was anything that could be added to the overall mine plan and extend the mine life. Because once you go and do disturb this area, and the main area is already disturbed, you want to keep the local stakeholders happy by operating a responsible mine as long as possible, not just come there for like 5-10 years, grab the cash, and then run away, and then the local economy slumps back. So this was basically just a wrist slap, a little small triumph for this Aboriginal Areas Protection Authority. And Vista Gold obviously did not think it made any difference. And it was interesting. The judge did point out that the Jawoyn people had been asked to make a victim statement, and they had completely said, no, we weren't victims. There was nothing really disturbed by Vista Gold. They cleaned up what they had done. They removed some weeds and stuff like that. So they'll go away with this nonsense. And there may be some political stuff, too, where these are two different groups. The AAPA is more of a sort of a political group, and the Jawoyn are the actual Aboriginal group that have title to this entire area. So who knows what was going on. But this is now done with. It's not going to be a source of any sort of media speculation that there's going to be something horrible, like when Rio Tinto blew up a sacred grotto that was actually a serious sacred grotto in the Pilbara region. And from last time I talked to management, they are hoping to have the feasibility study for the 15,000 ton per day operating scenario out by middle of July. This will be an important milestone because this will make the project digestible by mid-tier producers. Right now, it's only maybe 5 to 10 very large producers that can handle a billion dollar capex. This would be a smaller capex project. It could still be scaled to the original operating scale from the feasibility study done in March 2024. And I think it's interesting. They've been doing confidentiality agreements with a lot of different groups, both big ones and small ones, and they were surprised that some of them were actually asking, obviously we're thinking $3,000 plus gold as a long-term reality in mind, can you make it bigger than the 50,000 ton per day scenario that's in your original feasibility study? And the other feedback I got is that this audience, the sort of the institutions, the fund managers, they are just starting to kick the tires, do their homework, and all this muttering about how gold is way overpriced. The reality is gold and the gold juniors and the gold producers are still under-owned by the investing sector.
Where is Arizona Gold in its Philadelphia drilling timeline?
Well, that's a good question because Arizona Gold and Silver is down about 40% in the favorites collection, and that makes it the second worst performer this year. And yet the company is still busy working on the Philadelphia project, which is in Arizona. And the last assays that they reported were on April 7th, which was for hole 136. And this was the first one of a series of holes drilled along the road that tracks the trace of the Philadelphia vein on the rising fawn claim, which has not had the drilling that other claims had in the past. And part of the reason was that the road went right through there, the local highway, which is now bends to the north and is no longer going right on top of the vein. So they have 10 holes completed along that trend. Mike Stark thinks they should be able to start reporting assays in early June, and it'll probably take a month to report all of them. What the company has publicly disclosed is that all these holes intersected the vein structure with the same sort of textures in that lead them to believe this is going to be good mineralization. And hole 136, which they did report, it yielded 4.9 meters of 9.2 gram per ton. And because of the dip of the vein and the vertical nature of the hole, this was basically 50% of true width, so about 2.5 meters of vein material. Hole 153 is now underway from BLM pad number 2. Earlier in the year, they drilled several holes to the south on BLM pad number 1, and this BLM permitting had two purposes. The first and most important was to test the Red Hill hypothesis, which was the suspicion that in the hanging wall of the Philadelphia vein, there was lower grade mineralization, 1 to 2 grams per ton, that could be bulk mined. And the footprint was such that there was room for 2 to 5 million ounces. Well, the results reported earlier this year, and this is what helped Arizona Gold end up down 40% from the start of the year, was that the grades were more in the half gram per ton range, which is not what the market wanted to see. So for now, the Red Hill hypothesis has been suspended. So the purpose for drilling this hole number 153 is basically being drilled to the west at an angle to intersect the vein where 136 had intersected it, but down dip from that. And that was the purpose, the second purpose for the BLM permitting, so that they could step onto BLM land and basically drill at an angle that allows them to intersect down dip the vein on close to a perpendicular and get a proper understanding of what the dip is and what the mineralization is. And that hole, they may be able to spray a couple more from that BLM pad. The unfortunate thing about BLM permitting is they allow you to permit 1 or 2 locations, and all you can do is fan holes from there. It's not like you can permit a grid and just start stepping along this line. Now, they also reported on April 28th that they had staked 400 acres in the flats to the west of the Philadelphia project, and this is intended as a future heap leach site. And so you ask yourself, okay, if the Red Hill hypothesis right now is not flying high, what do they need this for? Well, the Plan C outcome, the smallest outcome, is that they end up delineating maybe a 500,000 ounce high-grade resource that ends up being underground mined and then trucked to a mill somewhere, or perhaps even to the Moss mine, which is now owned by Mako Mining, where they were mining 0.4 gram per ton material, and have it blended with the low grade ore onto the heap leach piles and recover it that way. But a middle outcome scenario is one where there is enough low grade mineralization in the hanging wall and the footwall of the Philadelphia vein that it could be developed as an open pit, bulk mineable tonnage, and there was the footprint such that one could imagine maybe a 2 million ounce outcome. So the heap leach pad site claim has been staked basically to reserve it as an area where they could stack the crushed ore and heap leach this middle outcome scenario. We don't know yet which of the lower or the middle scenario is going to prevail. That's where these results that when they start arriving in June are going to be important, because it won't be just what's in the vein itself, it's also what's in the envelope of the vein that will matter. And they've also announced that they are starting another metallurgical study. The earlier they did they did on heap leach recovery. It only recovered 61% to 73% of the gold, which is not good. They hope to be able to boost this into the 70 to 80% range, which is generally considered good for a heap leach operation. And they also reported that they boosted their treasury back to $3.2 million at the end of April. And I did some back calculation in their notes to their financials, saw that insiders exercised about $272,000 worth of options, which is always a good sign when insiders exercise options that are not too much in the money, because that's a sign that they expect much higher prices down the road. And the way taxation of exercised options work, the difference between the exercise price and what the stock is, that's deemed income, slapped right onto your income as though it's earned income and taxed at your marginal rate. So if you think a good upside is coming for your stock, you exercise your options before they are way in the money. And the other 700,000 or so came from 22-cent warrants that expired on March the 5th. So they were able to raise almost $1 million during the past few months while their stock was being punished by investors disgruntled about the Red Hill hypothesis not being confirmed. But the rest of the story is continuing, and the slump that we've been in hopefully will start ending in June when we start seeing consistent good assays for the 300-meter segment of the Philadelphia vein that has never been drilled, that's within the Rising Fawn patented claim.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.